Welcome back to the S&P 500 futures. We're here on our 1 minute chart. And there we go. We are in our first trade. It is a long trade off of the EMA with a nice bullish candlestick. There is a lot to talk about this morning, so let's get right into our review mode. Okay, moving into our review mode here. This allows me to give you a better in-depth explanation of my thoughts. And as always, on the right-hand side, you can continue to watch as the trade progresses. So up here in this top right corner, this is where we went in on our entry. And as you notice, it is a nice, bullish, beautiful candlestick going with the trend. You notice that we are making higher highs, higher lows, higher highs, higher lows. And it's something that I always advocate to new traders. You always want to be trading with trend. It's going to be the easiest thing. You're going to have the market flowing behind you. So even if you may make the wrong decision, it still could end up in a win because, the market wants to continue higher and it wants to continue with the trend. So first of all, let's break down what happened in the overnight session. So overnight, there was this massive selling and it caused the market to gap down right at the open. And so with a gap down, we want to assume that the market will continue this into the day session. But if you notice here, that is exactly what it did not do. Every time it tried to sell off, and immediately you notice it did try to sell off here, it failed. All of the buyers came in, all of these sellers got disappointed. Notice every time there is a nice big red candlestick, it immediately gets rejected with a green candlestick, and then it actually goes sideways. So that's showing that there is some indecision. There's confusion. The sellers really don't know what they want to do here. And then finally, there's this last ditch effort to sell. You'll notice here, this is, one big leg down. The sellers are like, here we go. This is it. We're going to make this breakout and we're going to start a bear trend, but it is immediately rejected. And what I like to call that is it's basically a second failed attempt to break out. Okay. And that's something very similar to the two-legged pullback. Remember, with the two-legged pullback, we're looking for one pullback and then a second one. And then on this second attempt to reverse, right, the market fights back and it causes this two-legged pullback pattern. So very similar thing happening here. The market tries to break out once down here and then again, and then it fails. So let's go back to our trade. It looks like we are still in it. It is moving up higher. So let's move this market over a bit. And we'll notice that, yep, so we have made a new high at this point. And let's kind of talk about, okay, so why am I in this trade? Well, first of all, yes, we had the second failed attempt to break out. And then it caused this massive breakout outside of this congestion. We can kind of draw a square here. And we'll notice that, okay, so there's big congestion here. The market breaks out above it, and then it actually defends itself as it pulls back. Well, that's a really good indication of buying pressure, and it basically tells us that, okay, so if the market is going to break out strong and then it's going to defend, well, it's probably going to continue higher, and we are now probably in some type of bull trend. So immediately we can say, okay, breakout into pullback, and now we are in a bull trend. So with that in mind, now that we are in a bull trend, you really only want to be buying. And so the best place you want to buy is at the EMA. And that is what we see here with the trade that we've taken. We are entering in here at the EMA on a nice bullish candlestick. But there is one other thing that we should also think about, and that is the trapped traders. Remember, trapping traders is going to be one of the best things you can do for your trading strategy. So not only are we trading with the trend, but we're also trapping all of these sellers who are getting way too excited. So let's think about what are the qualities that we want to see with a trapped trader. Well, typically a trapped trader is a new trader. It's someone who is somewhat fresh and early into the game, and they have some basics that they understand. One of those being, okay, I love big bars, right? Big bars are going to tell me that the market is moving in the direction that I want to trade. So if you have a new trader and they want to sell, well, when they see this nice big candlestick, they're going to say, okay, well, that is probably a good indication for me that I might be right. And secondly, what is another thing that new traders love to do? Well, they love to go against the market. They love to be right. They love to say, hey, up here, this is the top, and I'm going to call it, and I'm going to make some amazing profits as the market sells back down. So number one, they love these big bars. Number two, they love being right. They love, the ego boost of, oh my God, I am the best trader out there. And then the third thing, and this is really the nail in the coffin and is exactly why I like this trade. They love those second confirmations. They love those. In this case, it would be the lower high. You notice the market trends down and then it ticks up once and then trends down again. Well, the first traders who were really eager and aggressive, they came in with that big red candlestick, they sold, and then on the second confirmation, the traders who were a little more patient, they're like, oh, maybe the first time it's not going to go, but I'm going to outsmart the market. I'm going to come in and wait for the second one. Well, they flood in. So at this point, all of the new traders are in, and then notice what happens. We test the EMA here, and both times it gets rejected. You'll notice the wicks, they tried to penetrate through, they were unable to. And so as it goes against them, this is where these new traders start to panic. And that is really the definition for me of what a trap trader is. So if we look at this trade here, it's got almost everything that we want. It's with the trend. It's with a strong trend. And you'll notice there is a breakout behind it. So think of this as kind of like a funnel. Think of it as energy. Think of it as a massive amount of tension is breaking out here. And there's this big force pushing behind us. And then on top of that, we're buying at the EMA. Remember, EMA is always a great place for us to purchase. And then lastly, we have tons of trap traders. There are these new traders that came in and sold here, and they're thinking, oh my God, I'm going to sell the top. I'm going to be rich. I'm going to be right. So these people come in, we wash them out, and it looks like our trade has completely filled here. So with these type of trades, there are different ways you can kind of manage them. You can think either, okay, I want to take out the highs. I think that's always a great profit target because if you imagine all of these trap traders, their stop loss is going to be up at the top here. So they're going to get washed out. And you'll notice right here, this is, kind of where they're getting washed out. But we can also go further than that. Remember, we are in a trend. And one thing to think about is we are early in the trend, okay? Early in the trend. The trend has just started. So there probably is a lot more room for this to grow. So if I wanted to swing this, I probably could have gone and held this on longer and gone for a bigger trade. But I think I'm happy with the profits we've taken. So let's move on to the next trade. Our next trade is about to form here. And if you can see what is happening, if you've listened to the earlier parts of this video, I'm sure you'll understand what this trade is all about. But let's move into our review mode again, and I can dissect it for you once more. So our last trade was right here. Remember, we bought the EMA, trapping all of those traders who were excited to sell. Well, what excites a seller more than a double top? You'll notice that the market made a perfect double top up here. And then what happened as that double top came back to the EMA? Well, it started to make those wicks and it got rejected again. And so as it gets rejected, I want to come in, I want to swoop in and buy because this is my favorite place to trade. I love going against these eager sellers who are trying to go against the market. Remember, the breakout is still happening and maybe we're not early in the trend, maybe we're slightly later, but I think the market still has a lot more room to continue pushing forward. And then if you notice, we have been holding the EMA this entire time. Every time we try to test the EMA, the market is defending it. And then if you notice here, we couldn't even get back to the EMA. Buyers were in such a hurry to buy that they were willing to defend away from the EMA. And so when I see that, well, first of all, I don't even need to be the one to see that. When the sellers see that, they're going to freak out. They're going to say, wait, why is the market not even able to come back to the EMA? What is that going to mean for my trade that I'm trying to sell right now? So all of these eager people came in off the double top, and what are we going to do? We're going to swoop in with our buy orders and try and trap these traders, relieve them of their positions, and hopefully make a good profit. So again, we are already out of our trade here. That was a much easier trade than this other one. It immediately popped up, broke through those new highs. And again, always a good place to take profits. We could take them right at the highs there. That's where their stop loss is going to be. But again, if you do want to swing these further, I think it's appropriate to hold on to them and hopefully go for a bigger trade. All right, the market is making some big red candlesticks here, but it is pushing into the EMA, and that is a great support zone for a trend. So as I see this green candlestick popping up, I'm going to want to buy in. I want to rush into this. I hopefully want to catch it at a good price, and we can take out the highs. Remember, with the bull trend, we want higher highs and higher lows. But if we notice it's actually going against us here and we're getting stopped out, I had my stop loss below the candlestick. I think, the swing low, that's usually a good place to put your stop loss. We got taken out. And when I look back on the trade, it's a pretty bad trade. I'm not going to lie. If we see what's happening here, there was basically just selling pressure all the way down. And the only detail of buying is a really small bullish candlestick. And then if we look back at the other trades, right, there were trap traders on those trades. They got trapped on the double top. They got trapped on the lower high. Well, there's none of that here either. It's just one straight move down into the EMA. But here we go. We can come back in. We can buy again. There is nothing wrong with losing a trade. You made a mistake. You came in too early, but that doesn't mean that we should stop trading. The opportunity and the setup and the pattern were still there. We wanted to buy at the EMA. We just should have waited for an actual green candlestick to show up and then for more advancing buying pressure coming in behind it. So that's what we have here. In my opinion, a much more beautiful trade. You have the green candlestick bouncing off the EMA, and then again, you have a second green candlestick coming in, and that's hopefully going to push us to the new high. Well, we can kind of already see that, and it's already happened in the market. So we've taken some profits off here. New highs are always, in my opinion, really good place to take profits. And then we'll see how we manage the rest of the trade. It seems like there is this doji candlestick, which is not a great signal for us. It basically tells us, okay, the market's slowing down, and it kind of had a mini failed breakout. But let's see how the rest of the trade pans out. So taking a look at it here, yep, we had that reversal candlestick. It basically told us, okay, the market's slowing down. There was a failed breakout, and now it looks like sellers are starting to take control. They're making these big red candlesticks. It's not looking great for us. So at this point, you would want to think about moving your stops up, or even, I could see us taking profits here as well. But again, it is a bull trend. And so when you're trading with the trend, anything could happen. The market could just magically pop its way up here, exactly like this, right? You have the green candlestick, and it looks like it's going to make this amazing move up. Hopefully it just pops up just a little bit higher here. And oh, that's not what we want. That's not what we're looking for. It's coming down, makes a lower high. That is a great place to get out. There's no reason to try and prove the market wrong here. Remember, the market tells you exactly what it wants to do. It made that lower high, and so it flushed us out. And that's going to wrap it up for this video. Thank you so much for watching. I hope you guys learned something out of it. I'll see you guys next time. Happy trading.